Hello, everybody. This is Dr. Duru from the Market Breadth with Ahan Analytics, my data consulting company. And welcome to the video. Welcome to the channel. Today, I am doing a follow-up to a video I did a month ago about how to bottom fish for stocks. And as promised, I am doing a follow-up. And let's get started with what I consider to be the best stock of that crew from a month ago, Illumina. Now, Illumina is in essentially the healthcare space or biotech. And as a reminder, it broke out here in mid-December above the 50-day moving average and confirmed with this big 7.7% rise or surge. It sold off with the rest of the market here, and it held the 20-day moving average, just like the S&P 500 did. And the good news is that I believe here this small gap up on January 9th happened after after the company produced some good pre-earnings guidance. So I consider Lumina to be a winner. And the fundamental news hopefully does confirm that this is a sustained bottom for the stock. So I really like this one. And I am going to accumulate even more shares if it breaks out and continues higher. Now let's give some context because this will be important, particularly for these other stocks that didn't do as well. This is the S&P 500, and just as a reminder, the S&P 500 bottomed back in October. And what I was doing in November, December, was looking for stocks that were now just starting to catch up. And you can see the S&P 500 broke out in mid-November, and then it had a very good December, and then it topped out right at the end of the year and sold off for that first week and now has rebounded back to those highs. Now, this is very important context for the rest of this video. Now, you can also check out more context on my blog, drduru.com/122. That's all one word, no letters and no numbers. And there I talk a lot about both technical analysis and fundamentals on a few names. But again, this is important context to understand just how well these bottom fishing plays worked out. So let's take a look at another one, which is FMC Corporation. This one's not doing so well. It's hanging on by a thread. Here again is the mid-December 50-day moving average breakout. It rallied toward into the end of the year. It even went counter to the market for the first day when it broke out to another high, but has been selling off ever since. So that first day performance that outperformed the market was very encouraging, but now it is underperforming the market because it is now at new lows for the year and looks like it's unfortunately going to test 50-day moving average support. Um, I am not yet sure how much of a grace period I will give this stock. I most likely will bail if it completes a confirmed breakdown under the 50-day moving average and just take my losses and look for the next opportunity, which would be a breakout above the 50-day moving average or some sort of other definitive catalyst. All right, let's take a look at the next one, which is TAN, the Invesco Solar ETF. This one is also a fail because it has confirmed a 50-day moving average breakdown. Actually, I shouldn't say also failed. The last one was failing. This one is a fail. Last one meaning FMC. And this is also a fail because it has completely reversed the gains from the breakout in mid-December. So I did not invest in TAN, as I mentioned in that video. I actually am an investor in First Solar, which is one of the biggest components of TAN. And it also is outperforming most of the rest of the ETF. So I have every reason to continue to hold First Solar because the 50-day moving average is holding. And also, I just really like the company. So I'm going to be more prone to hold on, even if it breaks down. This is, I consider, a long-term play. So I will only get concerned if it breaks down below these lows, particularly because this was the last earnings report. And I might be forced to take a loss if it comes down below these lows. So again, TAN, the solar ETF, is a fail, unfortunately. So if I were in this one, I would consider getting out most likely and just wait to see whether another catalyst appears. Now, the next one I have is, oh, right, SJM, which is the JM Smucker Company. Now, this is a stock that I'm invested in, but I did not have time to talk about it in the last video. Plus, it didn't quite fit the timing. So SJM actually broke out about a week before that video, but it has all the signature markers of a stock you want to bottom fish when the market is rallying and stocks are ending their downtrends. So you can see there's even fundamental reasons to follow this bottom fishing play because it broke out after reporting earnings and buyers basically have not looked back. So clearly there's a bearish to bullish reversal going on here based on some good news and investors changing their minds about the company and the stock. You could see the strength held for all of December. It didn't even come close to the 20-day moving average. It also, just like FMC, had a very strong start to the year. It outperformed the market. It even made a new high for this move. But unfortunately, it's kind of churned most of the way since then and is testing 20-day moving average support. Yet, this one is very strong looking, and I am definitely staying in this stock. So again, it's not one I mentioned in the last video, but I did want to put it in this one as an archetype for a very classic, very well-performing bottom fishing play. Now, my last one is a complete fail. Again, I did not mention Beyond Meat in the last video, but I did give Beyond Meat its own feature, its own video. I even wrote a blog about it because I called Beyond Meat my speculative play of 2024. And it has not worked out at all. In fact, it's got two features that have been bad. The first one is that despite hitting the prototypical 50-day moving average breakout, follow through, looking strong, it peaked out just as other laggards were breaking out from their 50-day moving averages, and Beyond Meat underperformed the rest of the way for the end of December, even as the rest of the market was rallying. And then on top of that, it started the year down with the rest of the market. It had this weak sort of rebound, and then the selling resumed. So now it's working on a new downtrend from its recent peak, and it's confirmed a 50-day moving average breakdown with two lower closes. Now, because I did call this my speculative play of 2024, it means that I'm going to give this one a lot larger latitude than I normally would. So I'm not quite ready to take my loss. I'm looking at the all-time low as the final pain point. And, I'm also holding on because after Beyond Meat reported earnings in November, it did hang on there. It didn't really make a definitive new low after reporting earnings. I think there is some small markers of a fundamental reason to stay in here. But again, I fully recognize that this is a fail and it's not going to be, if I weren't already in it, I wouldn't be buying it here. I would be waiting for the next 50-day moving average breakout to give me the signal. So thanks everyone for checking in. This is again a follow-up from a video I did a month ago. I'll put a link to it in the caption, as well as a link to my blog, drduru.com/122, where you can find more market narratives. I also encourage you to subscribe to my channel so that you can get more videos like this. I also publish shorts. I go over technical analysis. I go over the economy. I do some fundamental analysis that mostly I put on Seeking Alpha. So until I see you the next time, take care, be careful out there, and take it easy. And thanks for checking me out.